Weekly Economic Review. Key highlights. Euro area inflation shows signs of cooling amid summer risks. Euro area inflation is decelerating, although the annual core inflation rate remains almost 1% above the target. The cooling trend is evident as price increases continue to move in the desired direction. A notable deceleration in core services inflation in June, along with a narrower breadth of price rises, supports this trend. However, the summer season poses potential upside risks due to increased spending on tourism and entertainment. Implications for the ECB. The European Central Bank, ECB, is expected to maintain its strategy of gradual easing on a quarterly basis, with a potential rate cut in September. The ECB's approach aligns with recent inflation figures, indicating a controlled path towards price stability. U.S. economy, signs of cooling. Recent data indicates a softening U.S. labor market and a slowdown in economic activity. The ISM manufacturing and services indices both declined in June, contributing to a decrease in U.S. Treasury yields. Despite a rise in job openings in May, job growth has slowed, with June recording 206,000 job gains and a slight increase in the unemployment rate to 4.1%. Implications for the Fed. The Federal Reserve may consider easing monetary policy either through immaculate disinflation, where prices normalize without significant economic impact, or as a response to a softening labor market. Current data suggests a loosening labor market, which, combined with further progress on inflation, could lead to a rate cut in September. UK political landscape and economic outlook. The Labour Party's significant win in the UK election was largely anticipated and resulted in a muted market response. The focus now shifts to policy outlooks, including fiscal prudence and potential spending on the energy transition and National Health Service. These policy directions may provide greater clarity and reduce business investment uncertainty that has persisted since 2016. Fixed income market outlook. The report highlights a mixed performance in the fixed income market. Inflationary pressures earlier in the year led to adjustments in rate cut expectations across major central banks, resulting in underperformance of global government bonds. However, supportive market conditions have facilitated robust debt issuance, with investors attracted to high yields. The US dollar remains strong, supported by its carry advantage and safe haven status, while the Japanese yen continues to weaken. Central bank divergence. Divergence in central bank policies has expanded investment opportunities in cross-market interest rate views. The Fed, ECB, and other major central banks are expected to navigate their easing cycles with varying approaches, reflecting the nuanced economic landscapes of their respective regions. Overall, the economic outlook suggests a careful balancing act by central banks to manage inflation and support economic growth amid diverse and evolving global conditions.